Hello, everyone. I'm Matt Clark, research analyst for Money and Markets with your Money and Markets week ahead. What to watch for on Wall Street coming up this week. It is a short week as the markets are closed on Monday for the President's Day holiday. So make sure you're factoring that into any potential trades you're making. The market will be closed on Monday. We'll reopen for regular business on Tuesday. Earnings are winding down. It is even quiet on the IPO front. But here are some things to look for and to examine for the week ahead on Wall Street. Like I said, there are no initial public offerings that I could find scheduled for the calendar this week. However, there are three pieces of IPO news from last week that I did take a bit of an interest in. It all relates to the fact that companies that are coming to IPO are actually raising the deal size of their IPO ahead of their actual pricing. So just a day or two before they actually price on the market, companies are saying, well, we're going to change things up a little bit. And all this relates to trying to raise more money. Here are three examples. The Roth CH Acquisition 3 company, which trades on the NASDAQ under ROCRU, is a third blank check company formed by Roth Capital and Craig Hallam. Last week, they raised their IPO deal by increasing the number of shares they were offering. They aimed to raise $150 million by offering 15 million shares at a price point of $10 per share. The initial deal was only for 10 million shares at the same price. So here they're looking to try to raise additional capital by increasing the number of shares they're offering. Neximune, which trades on the NASDAQ under NEXI, a company that specializes in developing T-cell immunotherapies for cancer, they also did the same thing before their IPO last week. They raised their deal size by 25%. The initial deal was to offer 4.7 million shares at a price target of $15 to $17 a share. They changed it to offer 5.9 million shares, increasing their deal size to around $94 million. The last one, this one I took a little bit of interest in because of the marijuana market update, but AFC Gamma trades on the NASDAQ under AFCG. It's a commercial mortgage real estate investment trust, or REIT, that is focused on the cannabis industry. They initially filed to offer 5.6 million shares at a range of $17 to $19 a share. They changed that just before pricing to offer 6.3 million shares at $19 a share, raising their deal to $119 million for their IPO. The deal increases come at a time when IPO proceeds for 2021 have already hit $21.1 billion. That's more than all of 2016 and nearly half proceeds raised in 2018 and 2019, according to Renaissance Capital. They've already been 50 IPOs priced in 2021. To put that into context, last year there were 218, so we could be on pace to set a record for the number of IPOs listed out in 2021. Renaissance Capital's IPO index shows a trailing 12-month gain of IPO prices of 122% compared to the S&P 500's gains of just 19%. The index tracks pricing of U.S. IPOs on the market and shows just how strong IPOs have been since early 2020. And I think these price raises are indicative of that as well, because these companies are feeling much more comfortable about raising their stock float in order to generate more capital on the market. I want to take a deeper dive into some earnings. We are in the home stretch. We have been in the home stretch for a couple of weeks now in terms of the quarterly earnings season. There are still some big companies reporting earnings this week. Companies like CVS Health, Occidental Petroleum, Shopify, Garmin, Walmart, and Roku are all on the calendar to be reporting their earnings this week. I want to focus on the earnings for Canada-based Shopify Incorporated. It trades on the New York Stock Exchange under SHOP. The company is basically a cloud-based e-commerce platform. It allows merchants to set up and manage their stores through web, social media, brick and mortar, pop-up shops, all sorts of e-commerce solutions for any type of merchant out there. Now, in the last quarter, Shopify blew away consensus estimates for both earnings per share and for revenue. The company reported $1.13 per share in earnings on $764.4 million in revenue. Consensus estimates were earnings of 53 cents a share on revenue of $662.2 million. So they just knocked the doors off in terms of earnings per share and revenue. It was also the fourth straight quarter the company beat the pants off Wall Street estimates. Since May of 2020, Shopify's revenue has been on the rise. In Q2 of 2020, the company posted revenue of $470 million, beating estimates of $443 million. That revenue jumped to $714.3 million in Q3 and $767 million in Q4 of 2020. Wall Street has seemed to have gotten wise about underestimating Shopify's performance. Consensus estimates for this quarter are earnings of $1.18 per share on revenue of $906.4 million. I suspect that even with the raised consensus, Shopify will probably beat Wall Street estimates again. They've shown a really strong track record of really building up their sales, and I think the coronavirus pandemic and people trying to work from home and things like that are really just pushing Shopify to a new customer base. Earnings Whispers actually has the number at around $2.17 a share. I'm not sure if it's going to be quite that high, but it could reach $2 a share. Just something to watch out for when Shopify reports earnings. In this week's data dump, the data dump begins on Wednesday. Again, the market is closed for the President's Day holiday on Monday. The Census Bureau has a couple of data points they're going to release next week. They will release its month-over-month and year-over-year retail sales figures on Wednesday. The retail sales report measures the change in total value of sales at the retail level. It's a big factor in consumer confidence. After increasing by as much as 5.68% in October of 2020, retail sales have kind of started to taper off a little bit, and they're not seeing necessarily as strong of increases as they have before. In November, sales only increased by 4.1%. That uptick was even lower in December, which was around 2.9%. Another decline could suggest the economic recovery from the coronavirus pandemic continues to pump the brakes a little bit. We'll get a glimpse into how the year has started regarding new home construction on Thursday. That's when the Census Bureau will release its housing starts report for January. Over the last 3 months, new home construction has steadily increased from 1.5 million in October of 2020 to 1.66 million in December of 2020. Analysts are projecting new home construction starts to fall, but only slightly, to around 1.65 million in January. Finally, on Friday, IHS Markit will unveil its Manufacturing Purchase Managers Index, the PMI for manufacturing. The PMI measures the activity level of managers in the manufacturing sector. Any reading of the index of 50 or above indicates expansion in manufacturing. Below 50 signifies a contraction. Now, the index hit a bottom of around 36 earlier in 2020, but it is built back up nicely over the last part of the year in 2020. It had a reading of about 50 since August of 2020. In January of 2021, the index read 59.2, its highest reading in a year. Projections are for the PMI to dip ever so slightly to 56.5, still in expansion mode. Manufacturing firms are kind of in the middle now of typical first quarter slowdowns and order backlogs and things like that. So manufacturing doesn't necessarily pick up nearly as much as it does into the second, third, and fourth quarter. To finish off the Money and Markets week ahead, here's a look at some of the key earnings reports that are out this week on Monday. Even though it is a holiday, there are going to be some companies that are reporting earnings. Neptune Wellness Solutions, as well as Just Energy Group, will be reporting earnings. On Tuesday, things kick into gear with CVS Health Corporation, America International Group, otherwise known as AIG, Occidental Petroleum, and Devon Energy will be reporting earnings on Tuesday. On Wednesday, Shopify, as we've talked about, Rio Tinto, Waste Connections Incorporated, and Garmin, the popular GPS company, they will be reporting on Wednesday. Thursday, we'll see Walmart. That'll be probably the big one that people will be watching out for this week to see kind of what sales have done and especially how Walmart's e-commerce platform has performed in the final quarter. That'll be on Thursday, along with Roku, Applied Materials Incorporated, and Newmont, the popular gold mining company. And then on Friday, we'll wrap things up with Deere & Company, otherwise known as John Deere, as it's more known, and Magna International. That will wrap things up for earnings on Friday. That's all for me. I hope everyone has a great President's Day. If you do have a 3-day weekend, enjoy it. And we'll be back with much, much more in Money and Markets. Check out moneymarkets.com each and every day, whether it's a holiday or not. We will have safe and profitable information for you from myself, from Chief Investment Strategist Adam Odell, and Green Zone Fortune's co-editor Charles Sizemore, plus much more. We do that 7 days a week. Sign up for our free daily e-letter. Just drop your email address at moneymarkets.com and get that delivered to your inbox for free. So until next time, everyone, this is Matt Clark, research analyst for Money and Markets, your host of the Bull and Bear podcast, the Marijuana Market Update, as well as this week ahead video. Until next time, everyone, safe trading.